May profits be upon you. I hope you are all doing well today, especially my girl, Leslie. I hope you're doing well. I hope that you are building up your confidence so you can knock out those those goals you want to achieve. And you know what I'm talking about, right? So uh let's take a look at Dixie first. The reason being is because we have NFP tomorrow. All right, that is looming, and you got to be careful. You got to be careful with NFP because that's a high impact, uh, potentially reversal. It could cause a reversal in the market. All right, like CPI data, like interest rate data. All right, those things can turn the market around. Those are the high impact events I like to pay attention to. But look at the Dixie. All right, I just want you to look at this. I just want you to look at this. All right, I want you to see that at at the high here, the bigger picture. Let me take you there first. The bigger picture here. This is on the 4 hour. We can do this all on the 4 hour. We see that price is making a higher high, higher low, higher high. This is the low here. All right, a higher low, and then we make a higher high, breaking structure along the way. So we have an uptrend. Yes, very strong uptrend. All right, now inside this last push to the upside, this last impulse, right? We have lows being taken out. This is internal structure. Why? Because it's inside the trading range. This is the trading range. This is the trading range. All right. As soon as it breaks structure, as soon as this breaks market structure, that's the trading range. All right. And whatever happens on the inside of this trading range is internal highs and lows. Okay. And those are things you want to track. All right, because that's market structure too, just on a smaller level. All right, we have so instead of me calling it a break of structure, which I refer to uh, when higher time frame does it. All right, when the higher time frame does it, I call it a break of structure. This one, it says IBOS. All right, that's an internal break of structure. We have an internal break of structure to the downside here, a bearish IBOS. All right, we have a bearish IBOS here. We have a bearish IBOS here. I didn't mark this one here. Don't pay attention. Just pay attention to what I'm talking about. All right. All right. And those are the things you want to watch. All right. Because what am I tracking there? What am I tracking there? Come on. I'm trying to get rid of this stuff. I don't understand why it won't disappear. All right. Okay. That it did disappear. It just took a while to get there. Okay. All right. So okay. All right, let's get rid of that. So I got the chirps going. Let me turn that off. Mute site. All right. So we have the high here. We have the internal breaks of structure. All right, and here it gets nuanced. I'm looking for liquidity sweep. Follow the liquidity, right? I'm looking for liquidity sweep. This orange line represents a liquidity sweep. All right. When I see that liquidity sweep after an accumulation period, I'm looking for a manipulation, accumulation, manipulation, and then distribution, right? Price takes out the high, manipulates the high, and then comes and takes out the low of this trading range, right? Manipulates the low, all right? This was the manipulation, like a fake breakout, because the intent was to come down lower. And this is where we see the breaks of market structure to the downside, the IBOS, the internal breaks of market structure to the downside. So we have a downtrend going on here. What is this downtrend doing? Another IBOS here. What is this downtrend doing? It's facilitating a higher low in the higher time frame. What I already showed you with the green highlight, up, pull back, and this could be the move the next expectational structural point. You like that word? You like that phrasing? All right. The next expectational structure point is the higher low, because we've already had the higher high here. Got it? So I'm looking for price to continue higher. And guess what? After this break of structure here, we get the chalk, all right, the change of character. And then we have an internal break of structure to the upside. So this looks like the pullback, the retracement for the higher low is over. And it looks like we are going to start making our way back up. You understand? So what does that mean? That means strength to the Dixie. All right. Strength to the Dixie, which means what on the Euro USD? We should be going down. Look at that. All right. That's what you want to see. As it goes up, the Dixie is the mirror image of the Euro USD. The mirror image. All right. So what am I looking here? What am I looking for here? I got to get my English right. Do not pay attention to that. All right. I'm looking for, you see this? See this here? What does that represent to you? What does that represent to you? Yeah. Yeah. It looked like a fake breakout, right? It looks like a fake breakout, right? It's not a fake breakout. It's an internal break of structure, because we are inside this leg. And what is it facilitating? A lower high. All right. So yesterday when I saw this bearish leg come down, all right, this internal bearish impulse, and I see this candlestick formation here looking like a reversal pattern. I'm thinking as soon as it did this, I said, okay, finally, we may have the lower high that we were looking for. All right. We may have it formed, and price had an impulse to the downside, sweeping liquidity. And I'm thinking that that liquidity is going to get taken, and we're going to see a break of this demand zone. Come on, man. This thing is lagging. Look at that. Look at that, man. Yo, that's crazy, yo. Okay. So let's see. So you see that arrow here, right? I'm looking for price to continue down. Now, so I'm looking for shorts. All right. Now we may have some what do you call short-term moves. All right, but I'm looking on the 4-hour. So I'm looking for the broad strokes right now. All right. We have internal liquidity to come get. All right. It's a very strong bearish leg. You would think a retracement would be be in order. Maybe it pulls back up here to this to the wick area here. All right, because that's supply, whether you understand that or not. On a lower time frame, this is supply, because what did price do? It came down. I need to make this point because a lot of people miss it. All right. I know a lot of people miss it because I missed it too. I'm human, just like everybody else. All right. Price came down, pulled back, came down again with a lower low, pulled back, came down again. What does that leave behind? Supply. That's it. That's it. Okay. So just understand that is structure. Those wicks, this is a buy to sell. All right. Buy to sell. All right. And it creates supply. So, all right. So we have this. All right. I'm looking to see if price sweeps this liquidity and comes down lower, fills in this wick, takes out these relative equal lows, and comes to this area right here. All right. This little area right here, the extreme of this strong low. I'm looking for price to have a reaction of some kind here. Now, what I envision is price coming down hard. All right, a price coming down hard, pulling back to the demand that is here for the flip, because this is a strong low. It's not just going to go into that sweet night or whatever you call it. It's not going to just mosey on. It'll give a reaction. It'll give a reaction, but I believe we will break it, and price will pull back up to the demand for the supply. I mean, from the demand to the supply flip, and we can take a high probability trade to the downside. All right. I'm hoping that you're able to keep up with that. All right. And I also want to take a breezy look at Aussie USD. All right. We have a similar situation here. Okay. All right. Ooh, this is interesting. All right. We had a demand flip to supply. All right. I brought it all the way over here, but this is where it was violated here. All right. This is where it was taken out. So where would I be looking? Where would I be looking? This is the extreme of the reaction to this demand. That's where you want to look. That's where you want to look. And you see how price has good price action, efficient price action to the downside from here. All right. There are no price gaps and, fair value gaps or imbalances. So this is the last one. All right. This is on a 4-hour now. This is the last one. So this is the last valid zone of supply. All the way over. We had reactions to all of these, doing all of this. This is the sell and buy market maker model, right? I suppose. Anyway, let's see. We come all the way over here. We get that setup I always look for. All right. A push up, a pull back, a higher high, a break below that low. And we're looking at price come back into the imbalance for quite possibly the move down. And that might be happening right now. Oh my God. We're 6 minutes from New York Open. Please I don't want it to leave without you. We're in the gap. So I'm expecting price to come down from this area. We are in the fair value gap. This is also a mitigate. Oh no, this is a breaker. We got a breaker. And this is where you would expect price to do some funky stuff. All right. I would have liked it to come all the way up here, but you can't get everything you want. So this is where you would start looking for a short. I would start looking for a short. And if you want to be safe, you put your stop loss over here. Always put your stop loss above the zone above the order block in which you enter. Okay. And that's the way I do it anyway. All right. I'm going to take a peek on this 15 because this is really intriguing to me. All right. It came up here. Oh man, I can't believe I can't achieve. All right. So it's taking out these internal liquidity here. If you can get in, wait for a pullback. Wait for a pullback, or you get in. If you get in here, make sure your stop loss is above here. All right, that's what I would do. All right. Anyway, that would look something like this. That would look something like this. That would give you a ridiculous what do you call it? Stop loss, but it's your risk to reward that you're paying attention to, not how big your stop loss is. Now, if you want to be aggressive, you can go ahead and do that number there. Squeeze it up. That'll give you a 38%, which would increase your risk to reward. But I believe the lows down here are going to be your target. I always look for 15-minute to 15-minute targets, and this would be a decent target because look at all the liquidity. I believe this is going to be the start of a very nice leg, and that'd be cool. I'm not doing that. I'm not going to just jump in. I'm not going to just jump in. I'll wait until either price comes all the way up, or and give me my price, because this area here is there is a flip here. You can see it. You can see it on the 15-minute. There is a flip here from demand to supply, and that's where prices are reacting to. But I would like to see a confirmation myself. That's what I look for. All right, I need to see a break of market structure, not just a tap and go, especially from here. All right, if it breaks this, all right, then I'll be looking for a price to come back, because when price changes direction, it doesn't just most of the time it just doesn't just tap and go. All right, it depends on what the setup is. This is not